About one particular company now, Metropolis Healthcare is the next management on our show. The stock is up over 50% in the last 1 year. It's rallied around 60% from its 52-week low. It reported what was an in-line Q1 FY25 performance, with the company guiding for around 13 to 15% growth this fiscal. We have with us Ameera Shah, the executive chairperson and whole-time director of the company, to talk more about the outlook. Ameera, hi, welcome to the show. Well, let's start with the Q1 numbers. What stood out to me was your Mumbai market growth, which was up around 18% in the previous quarter. This is one of the most competitive markets when it comes to diagnostics. What's taking place there? What's resulting in this double-digit growth that you're seeing in the Mumbai market? And is it sustainable? What are you going to see in FY25?
So Ekta, actually, if you've seen the last, I would say, maybe 4 or 5 quarters, we've been showing the same growth in the Mumbai market. So I do believe that it is sustainable for this year. Look, I think, healthcare is really driven by science, how good you are, what your expertise is. And market competition really doesn't play as big a role, because this is not a pure play consumer business, which is driven by price and convenience, but it's really a business which is driven by how good your quality of report is. And of course, combining that with great services and appropriate pricing, etc. So I think with the kind of distribution we're building, the kind of approach we have to the market, as well as the fact that we have a very solid product and service, I think is really what is just leading to this growth. It's just unwrapping and unveiling of the untapped potential that has always been there for the brand.
So for Mumbai, what is your market share currently? How much do you expect it to increase? And if you could just touch upon the competition dynamics in the city as well.
See, I think there's no really third-party information about market share available in our industry. So any number I give you will be just instinctual or, our internal calculations. So according to us, we probably have about sort of a 15 to 20% kind of a market share in Bombay as an internal estimate. We do believe that we can take this to a 25 to 30% number over the next few years. And that is our attempt through the B2C as well as the B2B route. In the last few quarters, what's interesting is while we saw a rapid growth for Bombay as a city on the B2C side, we weren't seeing as good of a growth on the B2B side because you have to choose between the two for any market. But in the last quarter, what was interesting is we've now also seen the B2B side grow up, sort of growing much better than even last year. So, we are certainly very hopeful about this continuing. I think the competitive landscape is there are, a few good brands in the city, which do have chains, but majority of the market, which is 85% of the market, is approximately, unorganized. Or maybe 75% of the market is unorganized. So I think the opportunity to grow, the runway for growth is still large. We are nowhere close to being tapped out or sort of capped in any way. Like I said, the business really grows on the back of how much doctors trust you, how much consumers trust you, and thankfully having a strong brand has been a strong thing for us in Mumbai.
Hi, Ameera. Good day, and always good to see you on the show. Let's talk a little bit about pricing then. I think you'll try to push through a price increase a few months ago. So volumes are back to normal now, and are you trying to push through another price increase?
I think trying to do multiple price increases is unfair to the customer. So no, I think we did one as of January 24. I think that's ample for this year. We did see a marginal dip in volume, the quarter post that, which we think is normal. We have seen, volumes sort of come back to where we expected them to be. And Q2 usually is a better quarter than Q1 anyway. So we're not really, I wouldn't say that volume is a big concern at this point of time.
Okay, so what about True Health and specialty? Because, those are your key drivers in terms of growth. True Health, which is wellness, was up 28% on a year-on-year basis in Q1. Specialty was up 14%. Give us a sense in terms of what's driving this growth and whether this kind of double-digit growth is going to continue. What are the estimates that we're seeing in FY25?
See, wellness is basically more driven towards consumers, where people who are either well or people who are unwell are basically opting for more bundled packages, saying that, look, if I'm getting bled one time, might as well instead of doing 3-4 tests, let me do 10, 15 tests at one time. And that wellness, what we are calling, is including the bundled packages as well. So that we are finding as a consumer trend is certainly on the increase. So we do expect to continue to see it growing at a fairly rapid pace, much faster than the regular company sort of growth. So that's one. I think the specialty is a very interesting part for Metropolis because as probably the leader in specialty testing in India, we have almost 40% of our revenue coming through the specialty route, which really means that doctors for the most critical illnesses, when you have a stroke, when you have cancer, when you have brain damage, when you have something very significant, you're really reaching out to Metropolis to say, look, I trust their reports in the most critical times because accuracy plays that important role. And I think we are continuing to see that area continue to grow really well for us because, again, that trust is growing across all markets of India. And for that, your precision, your test menu, your variety of test menu, and we offer about 4,000 varieties of tests. And the precision of the test is very, very critical, because you're really talking about life and death potentially for a patient. So we are seeing both these areas grow very well. And the specialty is not only B2B coming through hospitals, but also coming through specialist doctors who are asking their patients to come to us for testing.
All right. Ameera, with regard to the year, let's talk a couple of numbers then, because a lot of our viewers, shareholders would like to know that. I think earlier you were guiding for 13 to 15% revenue growth. So do you stick to that? Point number one. Point number two is on margins. You're in the mid-20s. That this is the sustainable number, 25% odd margins?
So, we guided for this year approximately, like we said, 13 to 15. We stick with that number at this point of time. And margins, I think we've maintained that this year will be sort of in the similar range. We feel quite comfortable at those numbers. So I think this year, as we know that we've always mentioned that we have about a percentage dilution because of the rapid pace of lab expansion that we've been doing the last few years. And this year is the last year of the rapid pace. We've been doing this from 2021 till now 25. And from next year onwards, the goal, while we'll continue adding few labs like we used to in 2019-20, maybe 5, 6, 7 labs a year, but the pace of adding 30 labs a year will definitely come down. And the focus will move again back to adding collection centers to really be the feeders that then feed all of these labs. And the collection center network will move into a rapid pace, which is far more asset light and not capex heavy and does not dilute sort of the margin profile either. So I think we see obviously a very positive outlook for the organization going forward.
So 25% margins is what we can expect as a base?
At this point of time, the number of 25 odd percent is what we would expect for this year. And like we said, there is some margin dilution already happening, which is already baked into this, which will certainly get released over the next period of time. But we'll obviously continue to invest in other areas. So we would like to continue to sort of stick to this number of 25 to 25.5 odd percent kind of a number for the margin.
Okay, all right, Ameera, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Metropolis. That stock is just about lower by around 0.8% at this point in time, sticking to that 13 to 15% revenue growth guidance for FY25, looking to increase market share in the city of Mumbai to probably 20 to 25% in the longer term. We'll take a short break, but we'll get you more on the markets. A lot of stocks in focus. Stay tuned.